Hi, I'm Joe Guinan. I'm sitting here with market strategist Andy Busch, and we're going to ask him a few questions about what's going on in the economy and what's going on with Fed policy. Okay. Now, after that initial hike, what do you think? You mentioned that Fed talks about being data dependent, and they want to get off the zero policy. So if they raise rates and they raise the range from, instead of 0 to 25, we go 25 to 50. Is that enough for them, or do they really want to get to some level higher than that? What do you think that level is? What do you think their timetable is? Do they want to get to 1% by the middle of 2016, or what do you think their plan really is?
Well, they are data dependent, but I know they want to normalize rates because this is just, first of all, they're no longer an emergency situation. So you got to take that off the table. And the Fed's Lacker and Lockhart have both said that in some of the discussions they've had recently. My guess is they would love to get to a nice round number like 1%, probably by the first quarter of 2016. That would be my guess if they want to really take their time with it. But Joe, really, if you take a step back from this, two things really stand out. First of all, there's going to be a lot of volatility. Actually, last fall, Janet Yellen warned us that this was coming, volatility. And we've seen it in the stock market and we've seen it in the fixed income market. The second thing is that I would say we are changing the way that earnings are looked at by the market because we're changing the denominator on discounted cash flow models, right? You're starting to raise that number up, which means that the discounted cash flow that you get out into the future is worth less. And that's where the stock market is starting to struggle here. I think the Fed would like to raise rates to about 1% and see kind of what happens. I guess the major point I would take away is that the Fed has a long history of waiting way too long before they act, and then they rush to catch up when they're shocked to find out there's inflation. And that's right. Coming. So maybe by mid-2016 they start to accelerate interest rate hikes.
Well, thank you very much. This is Andy Busch, market strategist. I'm Joe Guinan from Advantage Futures. Please visit our website at advantagefutures.com. Thank you.